What's up, guys? Welcome back to UCR Forest Academy. Welcome back to my YouTube channel as well. In case if you're coming across my channel for the very first time, my name is Uche Chemeze Richard, popularly known as UCR Forest. So in today's video, or in today's lesson, or in today's episode, what I will try to be explaining in a particular video is that I'm going to analyze the Euro USD and GDP USD, AUD USD, NZD USD from higher time frame down to 1 hour time frame or 4 hour time frame, and I will show you what I intend to do on the upcoming week. It's going to be like more like a signal, and you're going to see what I intend to do. Whatever I'm going to do in every particular video is my honest review of what I intend to do when the market opens. So you could also see that this is not the first time I'm doing it. I'm doing this very particular kind of video. This is not the first time I'm doing this kind of video. I have done this video in the beginning of the year, which was the first week of the year. You could see I dropped a video here on Euro USD breakdown where I analyzed Euro USD from higher time frame down to 1 hour time frame, and I showed where I wanted to go in for a sell. He played that, he gave us over 100 pips, and that was 1:4. This one again I did last 2 weeks, Euro USD weekly chart breakdown on both Euro USD and GDP USD. This very particular setup on GDP USD was among it, and this gave us 1:4, 110 pips. Even this on Euro USD, it gave us around 1:2 before reversing to hit our stop loss. That's it here. It gave us 1:2 before reversing to hit our stop loss. So that the same thing is what I want to do on today's lesson or in today's video. You are going to see where I intend to sell from or where I intend to buy from on GDP USD, Euro USD, AUD USD, and the rest of them. I will try to analyze all these USD pairs. You will see how I do that, and I know that you're going to benefit a lot from this particular video. So I would want you to watch it to the end. Just stay relaxed, watch it to the end. You're definitely going to benefit a lot. So before I start this particular video, I love to introduce to you guys that our online class is still running. Should, in case if you have been looking for an online class where you have to learn forex from beginners level to advanced level, please give us a try. We have all the best qualities to make you to be a successful trader. We try as much as we can to make sure that you understand the strategy, the idea before any other thing, and we don't have any time duration. It's not like after 1 month, 2 months we are done with you. No, we have signed a lifetime mentorship program with us with this particular price. So believe me, you have a lot to benefit. So if you have been looking for a way to reach out to us, we have dropped a number on the description. So follow the number and message us on WhatsApp for you to proceed in terms of registration. So I also want to plead with all you guys, please like and subscribe to my YouTube channel. If you found what I'm doing on this YouTube to be very interesting and helpful to you, please like and subscribe. I'm begging you. Believe me, you will not regret it. Right, like and subscribe, and equally turn on your notification icon so that you'll be the very first person to be notified by YouTube whenever I drop a new video. So without not wasting much of your time, let's start now. So now I will be clearing the chart. That's number one thing. So we'll start with GDP USD. I will clear the chart and I will show you how or where I intend to go in for a sell. So this time around, after clearing the chart, I will now have to go to daily time frame. That's the number one thing I normally do. I want to see the overall trend of the market, what the market is actually doing on daily time frame. Remember, what I'm trying to do on this video is not to teach you analysis, but just to show you where I intend to go in for a sell. The market has been bearish for a very long period of time, and this was the last high the market printed. This was the last high GDP USD printed. So it is very unique now that I have the last high and this is the last low. This is more like my trading range, and I know that when the market break above the particular high, I have gotten a higher time frame change of character. If the market moves and break above this high, I've gotten a higher time frame change of character. If the market fails to respect the very particular place and breaks above it, I know I've gotten a higher time frame change of character, and I have to wait for correction to the downside to go in for a buy to the upside. So for now, that is not my intention yet. So what I will have to do now is I'm seeing an unmitigated zone here. I'm seeing an unmitigated zone, which is the very particular candle here. See this candle? So this is just like a hammer candle. This is on daily time frame. I know most of you will be shouting, what are you doing on daily time frame? Are you marking out your zones on daily time frame? I'm just marking out key levels here on daily time frame. It's not that I trade from daily time frame, but I mark out my key levels from daily time frame, then I scale down to 4 hour time frame or something like I scale down to 4 hour time frame to refine those zones, which is very important, because if I decide to take it here on daily time frame, my stop loss will be so big. And I know that's the reason why you are shouting, or that's the reason why you are asking me whether I do trade from daily time frame, just marking out my key levels. Those that trade support and resistance is going still going to drag this in this way. And you can see this is a very daily, this is the daily time frame key level. You see, this is the daily time frame key levels. You know what I normally tell you guys, that all these things are the same. You see somebody will come to Dante, I trade support and resistance, I do this, I trade SMC, I trade ICT, a lot of English that are given to all these things. And I just want to tell you that you need to do the right thing. You need to do the right thing. You need to spot these zones at the right places. Then you see that all of them are the same. This is when we scale down to 4 hour time frame, this thing is going to turn to SMC setup. You're going to see it's going to turn, you're going to spot clear of liquidity, you're going to spot a whole lot of things here. And you say, but it is not seen on daily time frame. But a support and resistance trader has already seen this thing on a daily time frame. So this is the candle I'm going to be marking now, because I'm not a support and resistance trader. I just trade SMC completely. So now this is it. This is the particular candle here. So what I will have to do now is that I can even refine it here on a daily time frame. What I normally do is that I use the half of that very particular candle. Very, very simple. I use the half of that very particular candle on daily time frame. The half of my zones, the half of my daily time frame zones are 4 hour time frame zone. Honestly, when you look at the very particular setup, the half, that is why I always activate my middle lines. The half of the very particular daily time frame zone is a 4 hour time frame point of interest or order block. When the half of my 4 hour time frame zone is a 2 hour time frame point of interest or order block. Do you understand? So that's the reason why I normally activate my middle line. So when I try to refine it, refine is reducing. When I try to refine it to that week, which is the half of the very particular daily time frame zone, this way, you will see that this is it now. When I scale down to 4 hour time frame, you're going to see a full bodied candle. Now this time around, we all have to know that the price is already at a daily time frame order block. There could be a tendency that the market will even start dropping. Something like that might even happen, but we just need to refine, because we can't be risking. This is over 100 and something, or even close to 200 pips, so I can't be trading with short stop loss. So now we scale down to 4 hour time frame. So on 4 hour time frame now, look at that very particular candle I told you about. Look at that candle, look at it here. You could see that it is a full bodied candle. You could see, let me zoom out so you can see. You could see, let me lock this so that you can look at the candle I am trying to. Alright, you could see that very particular candle here. Can you see that? That candle is a full bodied candle. Look at it here. Can you see? So making it what, calling it an order block or whatever. So where is the SMC criteria? Here we could see we have a clear of liquidity here. When the market pushed up aggressively, it had to clear some people's stop losses above the particular high, and then it did not stop the market to start pushing to the downside, which is one of the most things I normally love to see whenever I'm marking out my setups. I normally want to see a clear of liquidity. Whenever I spot a clear of liquidity, it even gives me more confidence of what I intend to do. Then again, we now have an inducement level here. So it's more like our daily time frame point of interest, because we know that this thing has already jammed a daily time frame. It has already mitigated, or it has already touched a daily time frame point of interest, which is here, somewhere around here. It has already touched it, and as you can see, there's a rejection. So we had to refine it down to this very particular 4 hour time frame zone. So most of you will even see go down to 2 hour time frame or 1 hour time frame. It is normal, because you don't want to be risking much. So for now, let me check whether the stop loss is normal. If the stop loss, if what I'm risking is okay, I don't think I have any reasons to go down to 2 hour time frame or to start refining it, because I don't like refining much, so that I will not end up missing out on that trade. Do you understand? So I will place my entry this way, and then stop loss above. So this is just around 44 pips. I believe it's not bad. It's just around 40. But let me keep it below 46 pips. So this is not really bad. Honestly, it's not bad. So my TP should be around 185 pips. That should be my TP. You get 185 pips. So when I target 185 pips, that means I'm targeting around 1:4. You understand? That means I'm targeting around 1:4. And where is my TP level? My TP level is just somewhere around there, because I know that definitely there's a big tendency that the market will surely want to respect the very particular place, because this is a very strong support zone that the market might want to retest. So you see, I'm adding more confluences of what you are, of your strategy to my SMC strategy. Remember that around every particular zone is a daily time frame key level. So there's a higher tendency that the market might even respect this zone, because that is just like the market broke out of the support zone in daily time frame, and all this now look like a retest. But somebody that is already calling the SMC, some will still come and call it another name. All these things are the same. But all you have to do is to do it rightly. I've always told you guys, you have to do it rightly, and you see that all of them tarries. So now you see this where our TP is 4, 1:4. Very nice risk to reward ratio. You risk 46 pips, and then you are targeting 184 pips. That's one thing about my pattern of trading. So if you still want to refine well, if you still want to refine more, you could scale down to 2-hour time frame. Just make use of the half of the zone on 4-hour time frame, make use of the half of the 4-hour time frame zone, and you are good to go. But I will leave it this way. I don't need to refine much. So also I've been looking at every particular stuff, and I am also having that little sentiment that the market is already changing, as already like it's looking like it's about to turn bullish, right? But before I need to confirm that, I think I need to wait for the market to break this high. But whichever way, I will also be looking at every particular place. I'll be looking at here, I'll be looking at every particular candle. So look at what I'm going to do now. The truth of the matter now is that if the market actually return back this way, if the market respect my zone and then start selling and hit my TP, then start pushing up and then break the particular high now this way, breaks all this high. Remember that this high is the last high on daily time frame. Then I will know that the market has already changed character. It will give me more confidence to wait for this zone that I've been waiting for since I think I marked out this zone, and I was waiting for this market to return back to it. I was waiting for the market to return back to it. I did this thing on I think around I did this thing. This thing played out on Monday, and I marked out the zone, and I was waiting for the market to return back to it, but it did not. The reason why I marked out that zone was because I spotted this internal structure change of character. Yeah, this is an internal structure change of character, and then I equally had a BOS somewhere around the zone. This is a BOS. All right, so you see this is a BOS, and I was waiting for the market to return back to the particular 4-hour time frame point of interest. The least thing this thing did was to rebalance a fair value gap here and started pushing to the upside. In fact, I was even very happy. Then I marked out my inducement level, but it could not really return. So as it stands this way, since the market has started to give a full retracement of my zone that I've been waiting for, if the market respect this setup and hits TP, I will not take this trade again. If the market hits TP and reverse and break this high, that means that, okay, sorry, what I mean that if the market actually hits trigger this setup, hits TP, then started going up to break the particular high, it will give me more confidence to wait. This will now be the other block that I will use to go in for a buy. That is, if I see something that look like this, and I have to wait for the market to start returning back for to give a particular or to give a particular other block to go in for a buy. So you're going to tell me that it's going to happen for this thing is going to take time. It will not take time, my brother. It won't take time. All these things are all about patience. You need to know how to be very patient. The moment I've done this thing, I have to go to other setup. I will see the one that is even more closer. That is why sometimes in a week I end up catching like 3 or 4 setups. It's very good. It's not, you don't need to take like 10, 15. No, it's not done. It's not done that way. You could see that in this very particular high and low, this very particular high and low, I only took 2 trades there. I only took 2 trades, this very particular place and here as well, and this very particular place. So do you understand now? So that is what I intend to do on GBP USD. So let me pause this very particular video just for you to see again, or maybe if you want to screenshot. So that is it. So now let's go to Euro USD, because I wouldn't want the video too long to be long. So on Euro USD, we will try to clear everything, go to the daily time frame. We must try to have the same setup here that we had on GDP USD on Euro USD, because these two things move in the same direction. You just have to know that they move in the same direction. So this is it now. I have this particular stuff here. So I have this particular clear of liquidity around the zone. But there's something I want to show you guys on monthly time frame on Euro USD. I know you're going to shout, monthly time frame, K. What are you doing on monthly time frame? This guy, sorry, don't worry. The thing is, one thing about me is that I'm more like a semi-swing trader. Do you understand? So, but if you have followed me very well, you know that I return a good risk to reward ratio, and I try to align all my entry or all everything I'm doing with the higher time frame. That is one thing about me. So when I go to monthly time frame, I will show you something. There's something I just want to show you guys on monthly time frame on Euro USD, which we really have to take note of. So this is it on Euro USD. We have this large imbalance. This is a fair value gap here on monthly time frame. So this is a fair value gap, and to add to more to this, the market actually broke all this zone. The market broke all this zone. Even when I try to squeeze out, we just see that Euro USD has been bearish. Like Euro USD has been pure bearish. The moment we had all this structure break here, we had this major structure BOS here. This is a major structure BOS. The market actually pulled, like it did like something like a retracement. Do you understand? Like this, something like a retracement, maybe to start dropping again to the downside to break this very particular low, something like that. But the reason why I feel that the reason why the market is actually buying now, the reason why it is going up now is because it came back to rebalance another fair value gap price led for a very long period of time. It means when you rebalance that fair value gap, it started going up. So I'm seeing something that look like this could be a long-term trend. This kind of thing could be a long-term trend, and when this kind of thing is going to happen is on weekly time frame. So even if you are to go in for a sell on Euro USD, you need to be very, very conscious of what you are doing. Now look at what is going to happen. Price came back, rebalance a fair value gap here. There is a change of character here. For this thing to go up, there is a change of character, maybe on weekly time frame or daily time frame. You must not have seen it. And when it changed that character, there was no good retracement. Instead, price was accumulating around this zone. As it was accumulating around this zone, a time came, it now pulled all the way down, and it has now rebalanced a large volume, a large fair value gap here. After rebalancing it, it doesn't need to break it won't break it once and start pushing to the downside. Immediately it touches that fair value gap, there's a higher tendency it will even travel for a long period of time. So this time around now, we could have something that look like this. Price will just want to dip in to this next monthly time frame fair value gap and start dropping, maybe to pick up this a change of character zone here. There is this another block here. I will scale down to weekly time frame and I will show you something. Maybe to pick up the other block, because the first it has rebalanced a fair value gap. Every time you spot a fair value gap in the front of your POY, maybe if you spot this in on 4 hour time frame, believe me, that thing will return to that 4 hour time frame fair value gap and go up. It might not get to your favor, it might not get to your other block that time, but after some time you see it returning back to your other block. You understand now? So that is it. So now this thing now could actually fill this fair value gap, return back to mitigate maybe the other block on weekly time frame, and maybe to start pushing up to get to a 78% level or give a particular stop before dropping to the downside. We might see something that look like this. Number one, we might see something that look like this. Secondly, let me remove this. Remember, this setup is that it will return first and fill this particular fair value gap. It will rebalance this fair value gap, then push it back to respect maybe a weekly time frame order block, and then push to the upside. Let's scale down to weekly time frame. Let me use that weekly time frame to show you something. Don't worry, I'm taking much of your time. I know that you'll be shouting, this thing is going to take long period of time. It's going to do that. So come, just leave this weekly time frame of a thing. Don't worry. I'm just trying to show you something. Should you, in case, if anything like this happens, maybe if you lose your setup or whatever, just know that maybe something like this happened. So look at that fair value gap here we spotted on monthly time frame. It's around somewhere here, which you can see that price has already rebalanced, and this is now another block. I don't like marking out fair value gap. That's something about me. I don't even like it. So now this is now that weekly time frame candle, as in this is a weekly time frame good point of interest. You can see this is it here. Look at it. So the thing you need to know that the price will not just boom get to that point of interest, because you see that fair value gap is plotted on monthly time frame that you're even seeing on weekly time frame. It's a very strong stuff. Do you understand? It's a very strong something. It is definitely going to respect it. So now look at that very particular stuff. So what I told you guys that could really happen could look this way. The market might just, you see this thing will keep on buying. This one that is has even formed a bullish engulfing. Let me remove this thing so you see something. It has even formed a weekly time frame bullish engulfing. Only God knows what is preparing. So now we could even see something that look like this. The market might even keep buying, and then rebalance this very particular monthly time frame fair value gap. Then now return back to this other block, to give a particular what they call it, to give a particular weekly time frame order block to start pushing up, maybe to return back here again, respect and keep on pushing up. Oh, you know, we have an external structure here. You can see we have a particular high, maybe to return back here, respect a particular zone. Sorry, oh god, to respect somewhere around there, to start dropping massively to the downside. Something like this can actually happen, or something like this can happen. So the next thing I feel it is going to do something like this, because I know that it is not really going to break this very particular weekly time frame or monthly time frame fair legal like that. It's definitely going to respect it. We might have something that look like this, boom, boom, it's my return here, and then start going up. I think it is the same thing what I did earlier, something like that. So but just know that it is a monthly time frame fair value gap here, or let me just complete what I'm about to say. So we could have something that look like the market might respect here, return back to this POY, or maybe to return back somewhere around there, but let's say to return back to this POY and start buying to the upside. Do you understand? Something like this is possible. The next thing again that is possible again is something like this. The market might respect it and then uh drop to the downside like this, something like this. So these are the three things that is likely to happen. But I know that there's a higher tendency that the market is going to respect this very particular order block here, because this is the weekly time frame for crying out loud, and this market has not even pulled back to somewhere 61. If I try to plot my fee from the high down to the low, you will see that where this market actually tested before was the 61% zone. It did not even reach the 78, so there's a higher tendency that this thing might come back. This is a weekly time frame for crying out loud, so let's scale down to daily time frame, maybe to catch some immediate corrections and then start, or to keep on selling. Do you understand? So that is not really what I have for the particular video. I'm just like trying to share an added advantage of what I feel that could happen for a very long period of time. So whenever you are selling or buying, you have a clear direction of the market. So now this is it now. So we concentrate more. The market is selling, right? It is selling. So we need to concentrate more on sell. We don't need to look for a way to buy. Here is my reason. This is the last high the market printed on a weekly time frame. This is the last high. And it's quite unfortunate that that last high is just behind, or something like a very or the fair value gap is just above it, which is a very dangerous something, because the market might even be seeking to rebalance that fair value gap. But I have a strong opinion that the market will do something that look like this. We might have something that look like this. This is a daily time frame, my brother. We might have something that look like this. The market might just want to respect it this way, and then respect somewhere around there to start producing any other stuff. So something like that could really happen. So let's continue. So when I will now go down to daily time frame, I want to expand this thing to show you an SMC setup on a daily time frame. So, and again, if you are the one that love trading support and resistance, if you have to drag this thing from here, you see that this is a support stone resistance finish. So now on daily time frame, so this is it now. Don't forget that this is a monthly time frame fair value gap. We just have to keep it this way, and we just have to be hopeful that price doesn't really want to rebalance it first. So now let's remove this thing. Remember, I told you that this is the last high, both seen on monthly, weekly, and daily time frame. You see, that's very strong. So the moment price breaks above that high, number one, we have gotten a change of character, and price has rebalanced the fair value gap. All we have to do is to wait for price to retest back, or maybe to return back this way, to return back and go in for a buy. That is it. If price actually do something that look like this, sorry, if price actually maybe breaks above the high, rebalance the fair value gap, start dropping to the downside, maybe we might spot a zone to take in, to go in for a buy, because we have gotten a higher time frame change of character. But we should not forget that there's a higher tendency that price will rebalance this thing and start dropping to meet the very particular zone here. Something like that could happen. But here is my honest review on Euro USD. We spot a clear of liquidity, very cool, very fine on daily time frame, and we have the very particular order block, the very particular candle here, a very unique candle that I think that formed since December 24th. You see, when I marked that very particular candle, when I marked that very particular setup, I was busy on other pairs, and it's not that I've not been trading since then. I've been trading, although I took a break on that during particular period, that 20th December, I took a period there. I took a break then. Then since January, I've been taking trades, right? And hey, so we knows how we do this thing. So don't even have to say that since December, not like that. So now we have this liquidity just in front of it, the inducement level just in front of it. So and still our other block or whatever broke a short to the downside. See, so that's unique. So for the fact we have spotted a daily time frame clear of liquidity, another block inducement, what I will scale down to 4 hour time frame is to refine it. Now I'll scale down to 4 hour time frame to refine the zone. Very important, because I don't have to be trading with this thing is very big. So now this time around we will refine the very particular zone this way. We don't have to refine much. Oh. Instead of it to refine much, better reduce your loss size and take that trade. Better reduce it and take it. It's not mandatory that you have to make that all those profit that you want to make on 10 trade on one particular trade. Then I will have to keep my entry this way. So this is just like around 61 pips. This is too big. But I want to show you guys when I was marking out this Euro USD setup. When I was marking out this Euro USD setup, I think this fair value gap of 18 is disturbing my charts. So just know that behind this very particular zone, there is a fair value gap. There is a monthly time frame fair value gap. Should in case if you might be waiting for price to go to start selling from there. So let me delete it first and keep everything very neat. So look at what really happened here. Look at what I want to show you. You can't be trading with all these zones. It's very big. When you decide to look at what really happened inside here, you will see that price here is very efficient. Price actually mitigated. Let me say mitigate. What I mean by mitigate is that price actually touched all the zones. The moment we had a new high here, let me lock up this. The moment we had a new high here, we had a new low here. We had a new high, we had a new low. You can see it here. A new high, a new low. Price retraced and rebalanced that very particular high and started dropping massively to the downside. But it's just like me, that time I was even looking at this week. I was waiting for price to tap into this week for me to start selling because I was refining the zone. This thing was too big for me that time. But that was not what price was asking me. Price is already rebalanced that very particular place. And then started dropping. And price gave this very particular BOS here, this internal structure BOS. You see that BOS, sorry. This is the BOS. Alright, so you can see the BOS here. And then look, after that BOS, we have this very particular last candle here. You see this very particular last candle. This is it now. So this is that last candle here. See that last candle. So let me extend it. So let me extend it now. So when I extend it this way now, you see that price was actually trying to get to that candle. It could not. You see, when price sold, it tried to retrace back. They could not. Price, it could not. It could not. It consolidated. This is a liquidity just in front of this very particular POY. You could not get there. And then finally, you could see price kept dropping to the downside without not getting there. So that is more reason why I have to extend it here. Do you understand? I have to extend it this way. I will now extend it, keep it this way. So now you can see this time around the zone is now little, right? It's not small. Then what we have to do now is to place our entry somewhere around there. Stop loss below. But here again, I want to tell you something. This time around, we are risking 36 pips, which is not really bad. And then we are going to target somewhere around there. So if we target somewhere around there, we are targeting more than 1:4. 36 pips, and then we are targeting 135 pips. Is more than 1:4. So now you see, can you see that now? But don't forget that all this thing every of here is a daily time frame point of interest, and this thing is very funny. Something that look like this can actually happen. That is why you just need to go whenever you are analyzing all these things. Whenever you are analyzing all these things, you need to go through different USD pairs just to see the one that fully meets the criteria, not the one that will meet the criteria and still be forming something else behind it. Now, don't forget, there was me around December or around somewhere around, I think, let me look at the date. Let me look at the date. What I'm about to tell you is honest truth. There was me around December 6th. I know I marked out this zone. If you go to my free Telegram channel, I even shared it then. So if you there was me actually was looking at the half of this week. I won't lie you honestly. I was looking at the half of this. Where is this thing one? I was looking at the half of this week that time. I marked it out, and because I refined it, the half of this very particular week is a 2 hour time frame point of interest this way. So you see, So and he gave me a clear liquidity that time. So I was very glad. I said I'm going to take trade from the half of this week. Do you understand? So when the market came so close that time, the market just mitigate the 4 hour time frame zone. Let me lock up all these things so that it will not be disturbing. So when I marked the very particular week, I was waiting for price to get to it, but price could not really get to that half of that because that week is the half of that very particular 4 hour time frame points of interest. Price could not get there, but price just touched the zone and started dropping to the downside. I was very sad that day, but I just let it go. This time around now, what is now happening? That week, is it not still available, or is it not still it does it mean that I've totally forgotten that week? You see, as a trader, always remember your first thoughts, what you are thinking that time. So now this time around, I'm trying to perform a little bit magic by trying to use this thing to touch here to tell me that this thing happened, forgetting that I once analyzed that very particular week. So what I'm trying to tell you in essence is that there could be a tendency you might see something that look like this. Price will just like touch this zone, even keep dipping in. Something like this can happen, no, because even to add it to add to that, the half of that very particular daily time frame point of interest is still this week. Something like this is very funny, and price will just touch it, pam. The next thing you see, price will start dropping to the downside, and it's going to be a bitter experience. Do you understand? It's going to be a bitter experience. So there are two solutions to that. It is either you accept the fact that you are going to risk all this zone, your stop loss need to be above it, which is 72 pips. This one is too much. Oh. Or you decide to accept the fact that I want to trade from the half of the week, then it is 50-50 now. You might end up missing out on that trade, or price might come so close that might not trigger, or price might give you a sniper entry. Three things can really happen. So we just have to be realistic in whatever we are doing. But for now, I will honestly tell you that since the zone is too big for risk tolerance of a thing, or to be on a safer side, I will go with the half of the week. I will go with the half of that very particular daily time frame point of interest. I will go with it because when I go to GDP USD, the zone is already very close. On GDP USD, it is already close. So this one is still a little bit far. From year to year is somewhere around 60 something or even some something pips. I think something like that. Do you understand? So since we are having a little bit complicated here on Euro USD, since what is really happening on Euro USD here is like giving us a double-edged sword, we just have to abandon it, like leave it, then go to GDP USD that we just analyze with free. As in this Euro USD, only on this Euro USD we spotted a monthly time frame fair value gap. Only on this Euro USD again, when we are marking out our zone, we are now being confused of double. We are now looking at how to reduce this thing so that we will not end up risking big. You see, two things is happening here. So it is either you use that GDP USD setup, or you wait for me to analyze the odd USD and the NZD USD so that you will know the one to pick at the end of the whole day. You just have to pick one. You don't have to pick all of them. You get me now? So that is it. But always know that even if GDP USD was to respect that zone, there could be a higher tendency that price will just come to the very particular one and react and start falling to the downside. Price might not even want to get into here. It normally happens. So something like that, we don't know when the week starts. But I'm just giving you my view. So now this is what I intend to do on Euro USD, but I'm not taking Euro USD. Let's go to other USD pair as well. One of the unique one I've seen is on GDP USD because that one gave me every criteria meet, and I just think I have to wait for it. Now let's go to NZD USD, or let's start with all the USD to see what we could really see here. Because see, the same thing here on GDP is on Euro. So let's take all the USD. So all USD. Let's see all USD here. All right. So before we continue as well, let me clear the chat. Let's see how we got the very particular setup. So now before I continue, I also love to tell you that there is my free telegram link is on the description. Use the link and join the very particular free telegram channel. What I do here on the very particular free telegram channel is that I drop free setup, as in I drop free setup every single time. I drop free setup, and maybe since this setup is very far, I go to maybe like I go to JPY pairs and NZD pairs and some other pairs, and at the end of the whole day I will still post the one that is very very close. So you have a lot of things to benefit on every particular Telegram channel. You have a lot of things to benefit. So I don't know why it's wasting time to come up. So all you have to do is to, all right, uh-huh. So this is it here, somewhere around here, I think. So what I do here on this very particular weekly, what I do here is that I normally share other setups on other pairs. Do you understand? So use the link and join the very particular free Telegram channel. It's free, you get. So you can be catching some other setups as well that I normally share around the very particular zone. So you can see this in the past. I shared USD setups as well. Where is it? All JPY, USD JPY, other setups that you see the market coming back to it, like the particular one I shared on USD JPY as well. So use the link and join, it's free. So now this is all USD. So now on daily time frame, let's go to daily time frame. On daily time frame, this time around I'm going to use weekly time frame because there's a clarity of what I want to show you. Then on weekly time frame, this is it on weekly time frame, and this was like my last buy before the market keep dropping to the downside. So whenever you see a buying candle here on weekly time, I'm teaching you analysis. So whenever you see a buying candle like a simple green candle here on weekly time frame, that is a massive buy. The market attempted to bot that time, but sellers was too strong. Sellers was keep selling to the downside. So it's enough. I'll have to go down to the with daily time frame just to expand the structures. So now on daily time frame, we load this way. Nice one. I've seen the setup already. So on daily time frame, I will be going with this very particular week. Very unique. So this week, all this thing was like my last year setup. When price was busy doing something else, I went to other pairs. I don't even have any business with this. I went to other pairs. So this is it. So that was that week. Actually on daily time frame, you could see. So nothing will make me forget it all. So now on 4 hour time frame now, we will now have to minimize. So I will now remove the particular stuff. So I will now mark out my C price BOS here. Now we are now on 4 hour time frame, right? So you could see we had a particular point of interest here. We had a very particular point of interest. This point of interest is a full bodied candle, but on daily time frame it is a week. Can you see? It is a week. It is a week on daily time frame, and on 4 hour time frame it is a point of interest. Can you see how those things looks like? So I could normally call it a hidden zone. I normally call it a hidden zone. So now it also gave me my number one criteria, which is what? Clear of liquidity. Now you're going to tell me that this is not clear of liquidity now. This thing just broke with a full bodied candle. It's not. But what do you see on daily time frame? What? You saw a week, right? So that is it. So now we will now have to, I think I'm marking the thing so big. So what is here is my inducement. This is my inducement. Very unique. Fine. So this is my inducement. I can't even forget this one as well. I can't even forget this setup because I knew the time I marked out this thing, the same thing I experienced in GDP USD was the same thing I experienced here. Price came so close, could not trigger my order. That's the same thing. So this time around, you could see this is my setup already on 4 hour time frame. No need to go down to 2 hour time frame. Even if I want to go down to 2 hour time frame, it is only when the stop loss is giving me something like 200 pips or 100 pips. That is when I will now go down to 2 hour time frame to refine. So this is where this time around, this one I'm risking 36 or 37 pips, and now my TP should be at this high. So this thing is also more than 1:4. This time around, we have on GDP USD, the zone is so close, but on NZD or but on all USD, the zone is far. So the reason why is because this is where my criteria are met, and I have to follow my simple rules. That's number one thing. I have to follow it. I don't need to go against it. Now, but if that zone was expected to be respected on GDP USD, you could see something that look like this. Price might just touch somewhere around here because this thing, it might respect somewhere around there and start dropping to the downside before returning back to this. Do you understand? Something like that can happen. But the reason why I will have to wait and be so patient for this is because this is like my last high on daily time frame. They send like a week on weekly time frame. So I know that the moment that price breaks above it, it has given me a weekly time frame change of character, daily time frame change of character. You see, it has given me a large information, like it's giving me a big information which I should be very thankful of. Do you understand now? So you could see on a particular high and the low, I only took setup here and here. That's how you should be trading. So this is what I intend to do on all USD. But even if we were to go in for any buy, we already know that we have a particular major time frame change of character here. After this high was taken, yes, I knew that something about a long-term trend is about to happen, something like that. Then sorry, we try to lock it. Then where should I be going in for a buy? This one is a little bit complicated though. This one is complicated because I have this very particular extreme zone here. I have a particular powerful extreme zone here that price could not get to. You get, price could not get to the very particular one. This time around now, this one safe, this thing was even giving me nothing like a clear of liquidity. This thing is very funny. So this time around, it is not even a clear, it is not a clear of liquidity. It's not. It is not actually. It is not a clear of liquidity. So I don't need to fool myself about that. That thing did not break with a week. So that thing is just like an equal low. It's just like an equal low. So I would even have to treat it like a liquidity in front of a particular point of interest. So I will only have to wait for price to pull all the way down here to take a buy. So you're gonna shout, ha! Which kind? What's the meaning of this? This time around will be a time I will even have to scale down to 2 hour time frame to show you the clear of liquidity that's really formed around here. So this is the clear of liquidity, very unique, and I'm gonna wait for it. Do you understand? That's one thing about me. I'm gonna wait for it. So you can't just change it. So this is it now. Very unique. That is a clear liquidity for me. Price cleared. You can see how price cleared with a week after this consolidation. Price cleared everyone. So I know even by now you are already learning what is clear of liquidity for me now. So I have to wait for price to drop all the way down to here to take a buy. It's going to take time. Yes, I know. I have to go to other pair. So that is why you have to be on my free Telegram channel or try to join our VIP group, which is our academy. And believe me, all these things you'll be catching it on weekly basis as well. So let's now, okay, sorry, let me go back to forward time frame again. Forward time frame to show you finally. So you see, this is where we intend to take a sell on all USD. That is it. So now for the last time, we see that we already have GDP, Euro, all of them are sell. We have already seen sell in all of them. So you see, very simple. So this time around now, you are now making the decision by yourself. Which pair will I be trading now? You're not making the decision by yourself, not me again. So now let's go to NZD USD, the last one. So NZD USD now, NZD USD. So again, please, I'm still begging you guys, like and subscribe to my YouTube channel. Please like and subscribe to my YouTube channel. Turn on your notification icon so that you be the first person to be notified by YouTube whenever I drop a new video. I'm begging you, you're going to benefit a lot from every particular channel. That's one number one thing. You're going to benefit a lot, a lot, a lot. So now let's go to weekly time frame. No need. Let's go to daily time frame. All right, this is it on daily time frame. So I just need to be remembering all the plans I have last year. I just need to be remembering it too, because it is a time for me to remember it now. So this was the last buy I have, somewhere around here. Forget this thing that happened here is a liquidity for me. I know what I'm saying. So this thing now, because I won't forget the fact that time I marked out a BOS. I cannot forget all my thoughts last year. That's why it's good to have a trading journal. So when price is returning back to where you have waited for a long period of time, then you switch and start doing something else. You need to correct that thing. So now this is it on 4 hour time frame. So look at that zone actually. So that zone here. So that zone actually met all the criteria. So you see. So let's delete the particular stuff. All right. So we have a clear of liquidity around here. We have a clear of liquidity around somewhere this zone. We have a clear of liquidity. So don't really forget that there's a time I was even looking at this particular one, this extreme zone. But I have here, I was looking at this particular one first. I was looking at this particular setup first. I will mark it. I will complete it now. So this is my point of interest here. So the before even before completing this thing, I've seen that this thing is now already sharing the same analysis with all the USD. Yes, and then extend. Wow, the same thing with all the USD. Then now we have a an inducement level here. This is an inducement level. There's nothing you will tell me. So this is my inducement level here. So see, so honest, this is where I intend to go in for a sell. This is where I intend to go in for a sell. Then this is it now. My stop loss just above, which I know that if price end up breaking that high, just with 21 pips, this one, all of you want to take this one, and my TP should be around here. So be targeting 1:4 as well. Very good risk to reward ratio. We're going to target 1:4, 115 pips, 115 pips. You see, the setup is already completed here. Don't forget that we have another setup above here, but we just need to focus on this. So this time around again, we don't really have to say that we won't look for a way to buy, because we already see that there's already a higher time frame change of character here, major time as in major structure change of character on 4 hour time frame. So now, where should I be going in for is buy. So this one, I think I should just be looking at somewhere around there. Although price mitigated this zone, price has already mitigated this very particular zone. This one is like this one is. As I'm looking at this thing, self, I've done like it's even giving me some little a bit. What will I even say? Like look at it now. It mitigated this zone and started pushing to the upside. That means we should just be looking at the very particular one. Should we do that? Or depends. Something like this. So this one is even looking like a GDP USD setup, and it has a clear of liquidity somewhere like that. So so this is it now. This is where I could be looking for a way to buy. So I've analyzed all USD, NZD USD, GDP USD, Euro USD, and you see that I'm seeing the same thing. So I would want you to pick one of it, just pick one, and then wait for it. And again, even if you consider it to be very far, consider the fact to subscribe or to join my free Telegram channel. Believe me, you will be catching some good setups. Maybe I drop every time.